Welcome to the July 11th meeting of the Central Illinois Marketing Club. And once again, we are video recording this for a lot of other people to see. We're not out on Microsoft Teams tonight, and so all the folks who depend upon me sending out that link are not going to have that opportunity, but they can look at it. This will be posted on YouTube. We are very pleased to have Brian Basting tonight with us. Brian is economist with Advanced Trading in Bloomington. And you're only going to get one advanced trading person tonight because Kent is not here. He'll be here virtually at the end of the program. But we appreciate all of you coming tonight and turn things over to Brian to look at some of the things the numbers that we've seen here in the last few days that you've been wondering about and thinking about, and how it's figuring out how it's going to really help you manage your risk. So, Brian, thanks so much.
Thanks, Stu. Well, good evening, folks. It's good to be with you. I've been here before. I work side by side with Kent, so you'll hear some of the same phrases that Kent uses, I'm sure, in terms of risk management and protecting your balance sheet, using the marketing tools available to you. But as Stu said, we're going to cover probably three different parts tonight. We're going to cover the USDA reports. There's one out tomorrow morning, 11 o'clock our time. There was a big one that came out 2 weeks ago. And then we're going to talk about our situation with the drought, okay, the dry weather, where we stand today, what the forecast looks like. I can't give you an idea of yields. I can give you some thoughts, what USDA may do tomorrow, but that's an evolving story, as anybody in this room knows. And then we're going to talk, most importantly, though, about some strategies to think about, to consider. Again, I know that Kent has talked with you on many occasions of some strategies to think about, but I think with these markets moving as much as they are, particularly the soybean market, I think you really want to be on your toes. So with that, we'll keep it informal. Stu, if you have questions, just go ahead and chime in here. I appreciate the opportunity to be with you folks. I hope these numbers aren't too small in the back. Sometimes numbers can be small. Tomorrow morning, 11 o'clock, USDA Supply Demand Report. It comes out once a month. Keep an eye tomorrow on this ending stocks number for corn. Two parts to it. The old crop, which is the crop, of course, you harvested last fall. The trade's looking for a number that's a little bit smaller than what it was last month. I think what we're going to see tomorrow is the USDA increase the feed residual number on the heels of that bullish grain stocks report we had 2 weeks ago. But I think they're going to reduce the export number. We are, as I'm going to show you in a minute, we are in a dogfight for the export market right now, particularly with Brazil. So that's not the bigger story. I think the bigger story that I'm get to in a moment was USDA took up that acreage 2 weeks ago by 2 million acres. Whether you believe it or not, that's what the market believes. And obviously with that rapid 30, 35 cent sell-off that we saw after the report, the market's building it in. And so it's going to build in a carryout probably over 2 billion bushel tomorrow. 2.25 is what the trade is looking at. To give you a perspective, that was pretty close to what it was last month. I think here's the wild card tomorrow. I think USDA wouldn't surprise me to see them take the yield down. The yield in June was 181.5, and with this dryness we've seen, we're going to highlight that in a moment, the trade's looking for about a 5 bushel drop. So basically, if you can think about 5 bushel drop on about 85 million harvested, that's about 420 some million bushel. And we've added then 2 million bushel, or pardon me, 2 million acres at an average yield of about 180, 175. So there's 350. It's about a wash. There's where you get the carryout at 225, 225. But the point of the matter is we don't know what the yield is. Nobody does. But we're going to look at some clues here going forward. And that's the drought monitor, of course. And this is as of the 4th of July. Does not include last weekend's rains. And just talking briefly with Stu, sounds like you folks did catch some rain down here last weekend. I'm up in McLean County. We're up in Bloomington. We caught anywhere from 1 to 2 inches around that whole area. So this is not reflecting that, but it came at the right time because you can see here that we were in a significant severe drought, as a matter of fact. What I was able to track down, I thought it was interesting on the internet, was let's zero in here. And My geography, folks, isn't terrific. I know that we are in Christian County. I know that's Christian County. I know that's McLean. That's where I'm from. But Stu, we've got folks here tonight from all these areas, several counties, I take it. Stu said Shelby, Moultrie, I think. Christian, I assume, maybe here. It's interesting, folks, as we go in Christian, I think Assumption's on the eastern part of the county. As we go south and west, if you believe the drought monitor, there really wasn't, again, I don't want to put words in, but on the drought monitor, there wasn't a serious problem. Now, that's 2 counties out of 102, okay? Let that sink in a minute. 102 counties in Illinois, and even here, that's abnormally dry. So I don't want to say there's not a problem. There's a problem. But it's interesting that right down in this area. Now, again, this is before the rains came last week. So Illinois last year, folks, had a record yield, corn yield, statewide. It's either 214 or 219. My brain isn't as sharp as it once was. I know in McLean we raised 232. But statewide record corn yield last year. And I'm hoping that was pretty good yields down here. Again, I don't want to overgeneralize, but for the entire state, I don't see that happening this year with what we got going. Stranger things have happened, but that would be pretty strange. Now, this is from the Ag Statistics at Illinois, USDA. Another way to look at it. This is the 7th of July, so a couple days later, but it still doesn't catch last weekend's rains. And again, look at that kind of a donut there in some ways. These aren't ideal. These are still dry areas. But even down up to your neighbors to the north and west in Sangamon County actually had a little bit of above normal, parts of Macon. But again, the rest of the state, think of north of I-80, how much corn is growing up there. Southern Illinois is in tough shape. Again, this does not include last weekend. So it's just kind of a perspective of where we are in terms of the impact of this dryness. This is from this morning, the weather consultant that we work with. Boy, we got a recipe. Driving down, I told Stu, I stepped out of my car, and you remember now that we're in the middle of July in central Illinois. I guess I'd say south central Illinois now. Point being is that there's a rest, it's that humid air, and now we got a front moving through. That's what our weather consultant highlights here. That's if you look on the radar now, if you pull out your phone, don't do it now, but later, you can see it. It's kicking in. Dakotas, Iowa. And he's thinking that maybe it's going to move a little bit further north, up towards I-80 and north will be the heaviest amounts. But still, even this area, this is set through Saturday, Sunday. It's not necessarily just tonight. It looks like it's going to kind of reform again Friday, Saturday. You know, above normal rain, 1 to 2 inches. Man, after living through that derecho a couple weeks ago, and I lived through the derecho, and gosh, the years fly by, either 19 or 20. That was bad for some folks. I mean, I went out to my brother and nephews have a small farm in McLean. We got lucky. My good friend from high school had a sweet corn plot that was flattened. Corn came back, but we got to be careful what we wish for, but we do need some more rain, seriously. But that was a nasty, nasty deal. So there is some rain on the way. You know, at this point, we'll take it. We'll see as you go forward again how much damage was done. Here's another way to look at it over the next 2 weeks. Here from now to about the 24th, 25th of July, promising. Again, this is just the best estimate from National Weather Service. Slightly wet here in south central Illinois. Stretches into Iowa, mostly normal. The area is a little bit of a concern now is a little bit further north in Iowa, northern Iowa, north of I-80. And Minnesota is getting dry. They could use some rain. Ironically now, the West, which had been devastated by a drought, Kansas wheat yields, terrible this year. Better than expected, but still bad. They're getting rain now because they can't get the wheat out harvested. It's too wet. But that area is improving. So that's kind of a broad picture. If you think back, I'm just going to backtrack here just for a second with the drought monitor where we were there a moment ago. Don't want to beat a dead horse, but again, Kansas is improving, if you can believe that. That was even worse there, but it's getting better. There's some concern there, and that's what the market was reflecting there with that June rally. We had a hefty June rally. We took a decent corn well back above $6, a little bit back above $6 briefly. Took Nove beans up there, and then of course the report came in and the bottom fell out of corn back below $5. And now Nove beans are trading about $13.50 a bushel. But it's an interesting year. Every year has its own personality, for lack of a better phrase.
When will the next drought map come out?
Comes out Thursday morning.
Conveniently after the report.
Yeah, it's always Thursday morning. Yeah, this is the nature of the beast. But that'll be an update. That will, of course, incorporate the rain that we had last weekend. Stu commented that the steering committee wanted me to highlight this report, and it's a big deal because on the 30th, USDA came out with two reports, grain stocks and acreage. Grain stocks was mildly supportive for corn. We fed a little bit more corn, if you take that at face value, than we thought we did back in March, April, May. The belief being that the corn market, if you think back, was grinding lower into Memorial Day. Then we had that rally in June from Memorial Day, whatever it was, 3-week rally. But that wasn't the story. The story was the stocks report. Here's the the story was the acreage report. Acreage report for corn here in June, the average was about 92 million, and that actual up there was 94. No guesses. The highest guess was 93. So we really, again, USDA is USDA. They do. I won't throw USDA in their bus. I think that they do the very best they can. They do a pretty good job, and we planted a lot more corn than we thought. It did surprise the trade, and we're looking now at some of the impact of probably a lower yield being offset by that more acres. Now, where do we find more corn acres? Just focus on the colors, folks. I know those numbers are tiny. Anything in blue is above what it was in March. Okay, it's not left versus last year. Remember the March acreage report? Prospective plantings comes out at the end of March. That's the first survey-based number. This is the second survey-based number. Anything in blue is above last report, and the darker the blue, the higher the number. So we planted a lot more corn than we thought up in South Dakota, down in Texas. But here in Illinois, the I-states, Illinois, Iowa, unchanged over in Eastern Belt, but Illinois, Iowa, Wisconsin, Minnesota, that core was up anywhere from 2 to 4% from March. So I went back and looked at just a quick and dirty way, like the bean-corn ratio was falling apart there in May. So maybe the good planting conditions and the facts that after initially being very attractive, the bean market didn't look quite as attractive in terms of price in May. Whatever happened, we kept planting corn, and we planted 2 million more acres than what the trade thought. So that kind of is set the top foundation now for 23-24 crop year, right? Supply side. So let's take a look now at crop conditions. Again, numbers are small. Don't worry about numbers. Look at colors. That's the crop condition report that came out on Monday afternoon from USDA. The change from a week ago, the states that improved from a week ago are in green. The states that declined, this is good to excellent, declined are in red and unchanged are in yellow. So nationwide, we went from 51% good to excellent to 55. We were 64 last year. So I don't want to say, oh, we're out of the woods, everything's, sunshine and balloons, but we did see Illinois increase from 36 to 39% good to excellent. Eastern Belt, we saw some decent improvement over in Ohio, up to 67%. Iowa is at 61% unchanged. Minnesota's unchanged. Nebraska jumps 13%. Of course, Nebraska's got a lot of irrigation, but they got a lot of rain in the dryland areas too last week. So they're up to 62%. Kansas up to 55%. We did see some states, Colorado suffered a little bit, and over here in the east, Pennsylvania suffered. But overall, we did see some improvement. So depending on what happens the next few days, if you believe the forecast, we could certainly see that number nudging up potentially again on Monday. And the reason that that's important is because we're pollinating corn. I'm just driving down Stu on 51 and almost all the fields now that I looked at are shooting tassels. It's not very tall. It's not very tall. I don't know what that means, folks. I knew some good agronomy buddies who could probably give you a better idea than me. Maybe we'll test the genetics here in 2023 for what we did over the lack of rain. Stu tells me down here, virtually nothing from early April into recent. McLean County, we got a big rain in first week in May, then nothing up until recently. Maybe the genetics will be surprised us pleasantly as producers. But the reason it's important is from the next 2 weeks, the 9th to the 23rd, on average nationwide, we're going to increase about almost 45% of the corn is pollinating. Here we go. Now we don't necessarily, we can't say everything is made once pollination. I think one of the things that was shared with me by a guy I really respect in crop production last year was we had such a long grain fill period last year that from the time it pollinated, it took a long time to get to that black layer stage. And we had some really, in general, really good test weights, really good quality corn in 2022. And we had record yields, as I said, nationwide. He said, Brian, you want that long grain fill period. And that means average or cool temperatures. We don't want to burn up this crop when it's trying to, keep that factory going and fill those kernels. But this is a big deal. That's why the market's been under some pressure. When you looked at that rain coming in, the forecast, they were looking at this rain that's going to happen supposedly tonight and tomorrow and this weekend, way back last week, in addition to that crop report. And that's why it washed out December corn below $5 a bushel. So here we go. The next 2 weeks are a big deal for corn in terms of pollination. But that's not the whole story, of course, but it's a big part of it. So what does the July forecast? This report came out at the end of June, so it's 10 days old, but we'll get another report next week for the month of August. But for the end of June, another thing that pressured the corn market was this report. This is the monthly temperature and precip forecast for the month of July. National Weather Service, objective. They don't have a horse in the race, as it were. Equal chances of rain and equal chances of temperature and above normal rain. I mean, other than maybe being a little bit cooler, that's about ideal for pollination. Under the circumstances of what we're left with here, given the corn is struggled, is the only word I can use, for 45, 60 days, whatever it did. Miraculously, to me, it hung in there as well as it did, but again, we'll find out when the combines roll, but that's not a terribly bullish forecast for pollination. We've talked about supply for about the first 10 minutes here. I don't want to forget demand. Demand is important, folks. This is supply-demand, which determines the price that you get for your crops. And demand is not looking very good for exports right now. We're going to highlight a couple things in a second, but the biggest thing is competition worldwide. These are the sales that we've got on the books for your old crop, the crop you harvested last fall. That number is anemic. We are not selling any corn. And I'll show you in a second why, but we do not have a robust export program. Last year, that purple line, we were well above where we were today last year. Now, we weren't as high as what we were 3 years ago in 20, but we're still well below what we were last year. And we just don't have that push or that pull, if you will, on the export side. And you can put a lot of that on what's going on in Brazil. Now, we've all thought about Brazil the last 20 to 25 years in beans. And they're still a force in beans, but they become a force in corn. This is a slide looking at the export forecast from the USDA, that red line. They'll update that tomorrow. But the updated forecast is for the 22-23 crop. That's the crop that they're harvesting now. Literally, they're harvesting now. If you can picture in the middle of July in Brazil, they'll export then, as I'll show you in a moment, all the way for the next probably 6 to 9 months. But USDA hasn't penciled in for a record amount. When do they ship that corn that they're harvesting now? Here's a slide of monthly exports of corn. They're harvesting here in July. They'll ramp things up here a little bit in July, you can see here. And then the 5-year average, look at that black line. Look what happens in August and September. Okay, that black line. Now picture this 2022, this red line. I don't have a forecast on there, but we've got a forecast internally that it will be a record this year. And that means probably for the rest of the calendar year into early 24, I would say, definitely into January, maybe all the way into February, your bushels are going to take a back seat. in terms of price. It's cheaper for a user overseas to buy corn from Brazil. And you say, well, we got the best quality corn. They've established a good quality reputation. I've been to Brazil once. I enjoyed it. They got great people. It's a terrific place to visit. I still think we got the best farmers and the best land in the world, but they have become very good, folks. And they have a lot of land that they brought into production. Point being, we've got competition on the way. And here's the final kicker on that. Brazil established a trade agreement with China, okay, recently. And China had been buying a lot of our corn, U.S. corn, the last 3 years, a lot of corn. China isn't going to buy too much corn from us, all things being equal, if they can get it from Brazil. And again, looking at that production number from Brazil being record high, I don't see China coming back into the U.S. market. So we've got a little bit of a different situation here than we've experienced the last few years from the export standpoint, particularly with the absence of China. So I'm concerned as we look at our balance sheet in a moment about what that's going to mean. We can't ignore what's going on in Russia and Ukraine. The reason is Ukraine is one of the world's largest corn exporters too. And you folks all know what's going on down there. It's pretty ugly. But their exports had reached a point here a few years ago. 30 million tons is about 1.2 billion bushel. I mean, in a good year, we'll export 2.2. So they're not anything to sneeze at either. Now that number is USDA. They'll update this tomorrow. Big number. That number is coming down because it looks like you've all probably heard of this Black Sea Grain Initiative export corridor that Russia and Ukraine have very tentatively built the last year. That expires next Monday, and it does not feel very good right now that they're going to renew that. And overnight, yesterday, I think Russia tried to send some drones into a grain terminal in Ukraine. They shot them down apparently, but that's not a good sign for getting that renewed. So here's from the standpoint of you folks. Yeah, we could have big competition from Brazil. Maybe we won't have as much competition from Ukraine. So that's a wild card. I don't want to stand up here. I listen to this guy drive down from McLean County, and he says the export market is awful, and then all of a sudden we start to see China actually buys corn from Ukraine. So maybe that's a little bit of a wild card. If China can't get all their needs from Brazil, maybe they'll come back. It's a fluid situation, folks. This whole last, not quite 15 months, 16 months, whatever it's been, it's crazy. But one of the things that kept that market moving of grain was that grain agreement, and that is almost gone now. And I don't think it's going to be renewed at this point, is our bias. Will it be renewed? I mean, it could. Stranger things have happened, but let's just say that relations aren't very good right now. So, all right, I always your eyes glaze over when you look at a balance sheet for corn. I want to boil it down to the bottom line, and that's your ending stocks, okay? A couple of years ago, we took ending stocks via a yield in 2020 down at 171. We took them down to 1.2 billion bushel. Average farm price was $4.50. Basically stabilized. The average farm price went up to $6 in 21, 22. $6.60 is what USDA is telling us for 22, 23. Again, carry out nudged up a little bit, but it may come down a little bit tomorrow. But that 1.2 to 1.4 range, that's tight, fairly tight. I mean, it's not ultra tight, but it's fairly tight. And there's a reason that corn's been here for quite a while, $6 to $7 a bushel. Now let's look ahead to the crop that's coming on board here in a few months. This is a fluid situation, but best estimate for what we have today is a 176 yield nationwide. We're looking at exports close to 2 billion bushel. That number could easily fall, but we're keeping it up there with Ukraine, uncertainty about Ukraine. But all of a sudden the average farm price is back down to $4.50. So I'm sure Ken has talked with you about risk management, how important it is to defend your balance sheet, use the marketing tools available to you. And I'll just reiterate that today, that these markets, in my career, which spans back to the mid-'80s now, I don't think I've ever seen December corn do what it did over the last 30 days, to go from basically $4.90 a bushel to just a little over $6 and come right back down to $4.90 a bushel. Usually you see one of these where it'll chip and chip and chop on the way. This one went up, came right back down. Will it do that again? That's certainly possible, but it could be fleeting as much as that one was. Kind of a busy chart, if you will. That's what the chart is of December corn futures, folks, starting back in 2012. And I also included, I thought I included 2008 on there. Maybe I don't have it there. But anyway, that's between the insurance price in February and October, right? So what have I highlighted there? We're about $5 here for 2023. I thought it was just kind of for fun. I took out all years but 12 and 13 and said these are actual numbers. In 12, we were on the way up to an all-time high in mid-August at $8.50 a bushel. And in 13, we were grinding lower. That was the year after the drought. And we ground lower all the way into fall at about $4.50 a bushel. But it was remarkable to see, look at how similar they were in the spring. This isn't price prediction. I know Ken has said that. It's just intriguing, I thought. But from a risk management standpoint, that really doesn't mean anything. The important thing is what are you going to do now from here? Are you going to give yourself some marketing tools to give you flexibility, leave the upside open? There are a lot of tools I'm sure Ken has shared with you, put options, a forward sale and a call purchase, whatever the case may be, a deferred put option. It's not too early to think about 2024. I'm sure that that's also something Kent has broached. But what I would emphasize, and Kent and I did talk about this when I just told him I was coming down here, we want you to make sure you get your 2022 bushels. If you got any left, get control of those bushels. All right? Get control, get a floor under them, and then put your laser focus on 23. And then if you got those things taken care of, think about 24. But I think it's still got a recipe for volatility here to the upside and downside, and you want to be a participant in the market. I want to make sure I keep moving here so I don't run past your time here, Stu. These are beans here. I know those are small numbers again. What you're going to see tomorrow is this new crop carryout for beans come down. In June, that new crop carryout, the beans in the field, was 350. That number is coming down tomorrow, which I'll show you why in a second. But this number is a big number too, and we'll show you with Brazil, a record bean crop that they harvested earlier this spring. All right, we talked about the the acreage surprise for corn. It was a shocker for beans. Look at this natural. That was what the trade was looking for, about 87.5. Okay, and it comes in at 83.5. So you're basically, what is that, 3.5, 4 million acres below expectations. Poof, bean market goes 70 cents higher. I don't think that will be the final number. I just heard a story in the office today that a guy was, where was it? I was going to tell you too. It was somewhere here in Illinois, not too far from here. Was rolling the dice, as it were, with double cropping beans. And I'm like, this is the 11th of July. Wait a minute. But the wheat is coming off. Wheat harvest is almost done here in Illinois. And what do you got to lose? If you've gotten moisture now, take a shot and double crop beans. So I think that number is going to nudge up, but obviously double crop beans are lower yielding those. But where do we find more bean acres? Less bean acres. All those states in red are less than March. Illinois is down 7% from March, 6% here in Missouri, 4% in Iowa, 8%, almost 9% in Wisconsin. The only states that were more were the very much the minor states in terms of production. So we planted more corn, a modest amount, a significant amount more corn, and a lot less beans. Crop conditions for beans did improve last week, but not as much as corn. Only went from 50% to 51 good to excellent. We don't make a bean crop with one rain at the end of June, 1st of July, even middle of July. It helps. 62% last year. States in green were better. Iowa is one worth noting. Minnesota, 2 big bean states. Look at North Dakota, another big bean state. 3 states there that were declined in conditions from last week. So the bean market could be just starting here. How about beans blooming here? We're going to see about a third of the beans bloom over the next 2 weeks. So we'll be about 2/3 blooming here by the last week of July. And of course, we'll get into August then and set pods in and fill those pods. And I just thought it was worthwhile to take a stab here this is not July like we looked at for corn. This is July, August, September when we're going to be filling those pods, particularly for those late double crop beans. It's going to warm up if you believe National Weather Service. And again, sometimes you got to take a forecast with a grain of salt. Each of you in the room has seen that more than once. But warming up and not as wet either. More wet westward, obviously across Kansas, Nebraska, but equal chances here in the heart of the area of the Midwest here. So obviously we're going to need some rain to fill beans. A couple guys that I do respect, and geez, every time you think you know something, you get surprised. So again, take this somewhat with a grain of salt. But a couple guys said I respect, talked to the last couple weeks, that we've taken something off the corn. I don't know, 5%, 10%, 15%, I don't know. But they both were thinking, and I thought it was interesting, that we still got pretty close to full potential for beans. Who knows? Maybe, maybe not. But these are guys I respect. And beans are a pretty resilient crop. And we are starting to get some rain. They are setting blooms. Once you get a chance, when you're putting blooms on that plant, that you're going to get pods and you're going to get a chance to fill those pods. So we'll see. So I haven't given up the ship yet on beans. The demand side on beans is something else. It's not particularly promising. This is what the unshipped sales of exports are. Last year, Brazil had a problem at the end of the growing season. They got dry. And we had a bunch of customers come to the U.S. then. And that unshipped book, look at how much that was compared to the previous year. It's just the opposite this year. Brazil, biggest crop ever. Nobody's coming to the U.S. We're back in the same boat we were 2 years ago, and we're seeing probably a smaller number tomorrow morning from USDA in terms of exports because we got cheaper beans coming out of Brazil. So what does it mean? It means Brazil is going to be in the market probably for the next 4 or 5 months. That's a record projection. Our internal director of our department, a native Brazilian, as a matter of fact, he married a gal from northern Illinois that he met, and he's thinking that number USDA will come out even a little higher tomorrow than what it is. When does Brazil ship? Remember we talked about shipping corn? August, September, October, November into January. They're shipping beans right now. And they are shipping beans to beat the band. Record amount of beans shipped here. That's that green line. In June, we think that number is going to be a little bit higher than even May. But that's a record number for the month. And then they're just starting out July. We don't have it in here. That's the green box. But first 10 days here, they've gone off the charts. They are exporting everything they've got. We are getting crumbs now in the export market for beans, back to being the residual supplier of beans. So I'm concerned that the export market is going to weaken tomorrow. The USDA came out last month and put exports at 2 billion bushels. We're about 35 million bushel below that at 1964. Our old crop carryout's higher than what the USDA is. Because of that, USDA was at 230. That number may nudge up a little bit tomorrow. But this is the bigger number. USDA was at 350 for new crop, okay, the crop in the field. Our working number today is at 107. And you say, whoa, that's rationing mode. And obviously the bean market is pretty volatile right now. A lot of question marks here. Obviously the biggest question mark is what's this yield? We've still got it in at 50 bushel with that updated acreage, smaller acreage, right? And what about demand? This is what we'll look at tomorrow. What will USDA do? If they trim back exports, trim back crush with anticipation of record, picture yourself, you're a Brazilian right now, and you're going to be starting planting beans in about 2 months, 2.5 months. How excited are you to go to the fields with the bean market being resurrected, as it were, by that acreage report? We think they're going to plant more beans this fall in Brazil than what we were thinking 3 weeks ago, 2 weeks ago. So they may trim back that export number. That number be a little higher, but it's precarious. And that's why the bean market's as strong as it is. It's kind of the same chart we looked at for corn. Try and pull out, if you will, where we are for beans at $13.50 a bushel. Remember, corn had collapsed down to $5. Record high for beans. I'm not saying it's going to get there. I'm not. This could be it right here. But just look at the volatility from about the 1st of July through harvest in beans. and pick out a year, any year, pick out this green year in 16, went lower. The purple year is 12, it went to an all-time high. Last year in 2022, that kind of ground sideways. This is another year, this is back in 2008. Of course, that was the year the stock market melted down too, but look at how low it went. I'll get to that in a moment, but point being is you want to manage this opportunity for beans. How you want to do that? Again, defend your balance sheet. Look at some alternatives. Put options, short-dated options. I'm sure Ken has talked to you about those before. What about a forward sale? Nothing wrong with a forward sale. You're probably over $13 cash again for fall. Think about 24, but again, get your ducks in a row. If you've got any beans left from 22, I would manage those first, get that floor underneath those, and then look at 23. And why do I say that? Because there's always black swans out there, folks. We don't know. I mean, the worst black swan that I can think of on July 11th, Stu, would be something like if China tonight had had enough and said, we're going into Taiwan tomorrow morning. And probably not a prediction. I'm not going to put this on tape and say this is going to happen. But that would be one possible scenario where the bean market goes away. Obviously, because China, we would cut off everything with China, and it would get kind of ugly. But black swan event, you hear that phrase. It basically is, I looked it up. It's a rare and unpredictable event. Unpredictable. I know Kent's talked about that with you a lot. Unpredictability of prices. Okay, the upside was if you were an end user, what's the most recent black swan event that you can think of over the last couple years affecting the markets? Not necessarily a bad event. Well, it was a bad event, but in this case it was a bad event. I'll give you a hint. It was a bad event for an end user. Remember when Russia invaded Ukraine? The wheat market went from about $8 to like $12, like that. And that also supported corn and beans last spring, the spring of 22. That was a black swan for an end user. Now, the black swan for you folks would be, again, the scenario maybe that I just described, not predicting, but something happens that all of a sudden everything falls apart, really falls apart. So you want to be protected. You want to be in the participant. You want to be flexible. You want to give yourself a floor. I know Kent talks about that. Leave your upside open. So, Stu, at 7:15. I don't want to beat a dead horse here, but that's kind of a quick overview of some of the things just for review. Some of the things that we talked about were that surprise acreage report for corn and the shocker for beans. They're going in different directions, folks. The corn market saw a lot more acres and a lot lower price. The bean market saw a lot fewer acres and a lot higher price. Unpredictable. Who would have thought that? What about the drought? Hopefully we're seeing some signs that this general pattern is breaking, but we've got 60 days, almost 90 days to get to before we get into those fields. 1st of October, maybe a bit earlier, but a lot's going to happen. I always like to share the story, Stu, of if I were to come back here on July 11, 2024, we'd look back and we'd say, man, I didn't see that coming. You know, if we were that good, folks, we would all be a lot wealthier than we are. But I think that the good news always about markets is we have tools available to us. Not every business has those tools that we have. They're not free. Each of them has pluses and minuses, but they're tools, and you find one that you're comfortable with and working with, find somebody you're comfortable working with. So that's all I got, Stu.
Any questions for Brian?
Does China, I heard today that China has 75% of their needs in storage or uncommitted. Does that sound right?
That's a great question. Did everybody hear what the question was? That China's, the debate is China getting those beans under roof, as it were, to crush them? And because the demand is there, we got to keep these plants churning out meal. We got to keep them, or are they stockpiling? And why would they be stockpiling? Who knows? But if they're just rebuilding their inventories with these big purchases, if they're just rebuilding inventories, then that's not as bullish as it would be if it were we want beans because we need to feed our hogs, we need to keep profitability of hogs right now is not super great in China. So what's China doing? It's one of those two. Our bias is, just listening to the guys in the office who follow beans closer than me, is that they are rebuilding stocks to some degree, because they did take down their stocks when these prices went up, folks. They don't like to pay 13 beans in the teens. You guys, I say you, me too. I love beans in the teens too, but if you're a user, you don't. So they drew them down. So now are they just rebuilding those stocks? But they have been buying. And at least they're still buying. That's a good sign. It's a really good question. Yeah.
Anyone else?
Can I ask one question, Stu?
Sure.
We are in not much. Is there much wheat? I saw maybe 1 or 2 fields of wheat cut coming down. Did any of those guys? Do you hear any guys double cropping wheat?
Planted last.
All right. I'm not trying to single anybody out.
I live
Go.
in the southern end of this area.
No, good. I say go for it.
We had quite a bit of wheat.
I say it. My good friend who I mentioned earlier, he runs a produce stand. He had a tiny field of wheat last year, 20 acres. And he said, Brian, I'm going to go out and double crop. I said, Dave, go for it. And I think they yielded somewhere around 25, 30 bushel, something. But he didn't put anything on them. He just threw them out there. And it was like mini vacation money.
Shift gears here and listen to Kent Stutzman, our regular advisor on cash grain marketing. Kent, it's all yours.
This is Kent with Advanced Trading, coming to you via Zoom link here that we created a recording for, since I am gone this week and can't be there in person. So we recreated this on Friday, July 7th. So the numbers I have here are from Friday. So obviously the market would have traded a couple days since going into your meeting, but this is as of Friday. We're going to jump right into the numbers. A lot of volatility here in June. September corn, 534 down to 487, down 47 cents. But we had a range of $1.45. You can see there was a lot of volatility. Unfortunately, we're closer to the low end of that range than we are the high end. We topped this market out, Wednesday after Father's Day weekend, and we have did nothing but go lower since. So old crop corn is mainly bid off September, and we've seen a big range, but unfortunately we are well off the highs, and I've seen basis values come down in a lot of areas as well. So cash corn bids are not anywhere close to where they were at the beginning of June. August beans, jumping into staying with the old crop, just the opposite. We went from 12.65 up to 14.27, $1.62 higher in old crop beans from the last time we had the meeting. We had a $2.44 range, 12.60 up to 15.04, and you can tell we are still closer to the high end than the low end, but well off of that high. Interestingly, though, I believe last month we would have seen a range of $2.31 from high to low, probably going the other direction. So we've gained back what we lost in May through here the month of June. Primarily, we have rallied a significant amount on beans. New crop corn, we have seen 541 down to 494 here on a Friday, down 47 cents. The range was 485 to 629, which is $1.44. Huge volatility in new crop corn. So we would have had a chance at some elevators to see $6 corn at the high. If you had offers there, they may have hit all the way down to 485 here this week. So back down below crop insurance levels, down to the lowest levels we've been at pretty much all year. Just not a lot of fun here in this corn market. New crop beans, like old crop, are just the opposite. 1184 up to 1317. We had a range of 1176 to 1391, so a $2.15 range. Again, well off the high, but still well off of that low for the last time we were here. So extreme volatility here as we've gone from planting to several months of below normal precip in a lot of areas, and then all of a sudden we caught good rains in a lot of areas, Illinois especially, and there's still rain in the forecast going forward as of now. So if the pattern truly has shifted, we still could have a pretty decent crop. If we go back dry, then there's still could be some issues going forward. I'm just going to go in through kind of where we're at with options and strategies, because I know Brian is taking care of the June 30th report, and our volatility has been mainly weather and June 30 report driven. When you change acres substantially like that, it definitely changes the game. But we were hedging or selling corn and buying calls on rallies. That's what my argument was last month. We were much we were well off the high that we created, but I was thinking, hey, why don't we sell some of that, buy some calls? We were still above the low end of where we had been, and we had over $5 corn at the elevator. So we could have sold it, bought some calls. Those calls would have looked really important as we were rallying and not seeing rain. But with that rally, I had some old orders in for 560, 570, and even a few 580 puts that we bought for 30 cents. Each of those levels were bought for 30 cents. The 580s, it took basically the high of the market to hit those. So I wouldn't have recommended everybody sitting there waiting on that. It's hindsight is all this is, but it was smart to have been buying those puts at that time. When we were rallying also, a bunch of old offers got hit at elevators that had been sitting there for a few months, and elevators bought the most corn they had bought in a short amount of time, but they had probably bought more in that short amount of time than they had most of the year combined. For some, they were so worried about growing the crop that they called the elevator and told them, get me out of that sale before this market really goes against me. And it went against them for a day or two. And now today, those sales would look really good if they didn't get out of them. If we had them and we bought calls, you would have been okay also. But a lot of concern by some at that time, whether they were going to grow a crop or not. So I get it. But if we were smart and we got puts bought instead, we look really good today, because I've already rolled those down to where we either already have money in our pocket above what we paid for them, or we're sitting there with a free put. So 570 puts, I believe, got rolled down probably to they would have gotten rolled down to 530s and made 30 cents, pocketed 30 cents, I should say, got your initial investment back. 560s went down to 520 for 30 cents, maybe a little shade over that actually, but if we paid 30, we get 30, we got a free put now at 520, still better than our crop insurance number. And obviously the 580s would look even better yet. We want to roll them down because we don't know if the market's going to go back up. Well, I don't know if those acreage numbers are going to change. We don't know what the yield's going to be. And we don't know if we're going to see some demand show up. But rolling them down, now you're sitting there with a free put. You feel pretty good today, even if you didn't get as much sold as you wanted, or at least you feel better than if you'd done nothing. Unless you're undercovered, it is difficult to go out there for me to tell you to go buy puts today when we're below crop insurance guarantees. About the only play that I see is making sales and looking to buy some calls if you're going to do anything. Otherwise, I think elevators are going to be awfully quiet unless this market can rally. So this slide was up last month: hedge, sell corn on rallies, buy calls, make you feel better about things. If we rally enough, look to buy puts to give yourself a higher floor. Well, we did that. We rallied. Hopefully we had the offer sitting there to buy the puts. It worked out exactly like we would have wanted it to, other than we would much rather the market have stayed up there. But if we had a plan of attack and we got puts bought, we feel awfully smart today to do it. The crop insurance guarantee number is what I kind of wanted to key in on here too. I left this in here, and what I was getting at with the last slide, if you got 85% crop insurance and you can grow your APH only, you have an embedded put at 502. The market's at 494. not much here today that I feel like we should go do. It's going to be difficult to do it when I've already got a floor with that. Unless, again, I don't have anything sold, and now I got at least 15% of my crop I could go sell. But what if I grow 5% more? Now my embedded puts at 477 if I grow my APH. If I grow more than my APH, or if I grow 5% more than my APH. If I grow more than 5%, that 477 is going to slip even lower yet. But again, it's difficult from a put standpoint. If I've already got the puts in place, I better have already got them in place. It's not going to look as attractive today to go out there and try to do it, because we do have good crop insurance guarantees from a dollar standpoint. When we shift over to beans, I would be looking to add puts if you're unwilling to sell anything. And I realize we're down, Monday, we had a high at 1392, or maybe it was Sunday night, early Monday morning, but we got the 1392, would have been over 1350 cash beans. I would be a willing seller at that. And I know that report June 30th was awfully bullish beans if you just look at it, how tight we would appear to be on beans. But yet here we are tonight at what, 1317, basically over 70 cents off of the weekly high, and under $13 at the elevator. But that doesn't mean I wouldn't sell $13 beans if we got back to it. We already had a good portion of beans covered with puts going into this. Now that we've rallied back this week, I have been able to buy $13 puts for 40 cents. Gives you a floor at 1260. I got the crop insurance numbers down there showing you that 1260 after I pay for the put looks pretty attractive versus just sitting there waiting on your crop insurance floor, because there's no guarantee you don't grow more than your crop insurance level anyway. But you're going to be well above that if you would look to get some puts. So if you really feel like, man, numbers sure look tight beans, I just don't know how much of these I want to sell, get puts on what you're not selling. If you've already got them on, quite honestly, if we had them on this winter, we've already rolled them down and had money in our pocket, and we've got a floor every bit as good as it is that you could do right here. And the $13 puts are not 40 cents with the market at 13.17. It is if we're up closer to 13.50. But 13.17, I would not be able to buy those for 40 cents here this week, but that's the target that I've had. Guys are positioned well if they managed risk. We've floated through this volatile time, and we're sitting here with floors better than crop insurance levels. We've added value if all the market does is go lower, but we've kept our upside open if it goes higher. It's a good feeling to have, to know that we can handle whatever the market wants to throw at us. And I would just assume the market go up and go down, but it sure does feel good to be covered if we are seeing the market go lower. So 2024, after that report, obviously before the report, we did see D's 24 corn get to 560. So we had chances to hedge 550 corn again. Quickly went lower, and then that report came out and was definitely negative corn. When you look at acres and finding more can be viewed as positive beans, but here's the issue. South America can plant a lot of beans, and if we stay elevated in price, they will plant a lot of beans this fall. We've had at least one, if not 2 years in a row, where Brazil had some crop issues, weather issues for soybeans, and then this last year it was Argentina's turn. If 2024, either one of them don't have a problem, the world can grow a lot of beans. So we got to keep that in mind. And I guess maybe why D's 24 hasn't fallen as much is for that reason, wondering if South America wouldn't switch some acres from corn to beans in areas where they only grow one crop. That's something that we got to keep an eye on, but I do like doing something above $5 D's 24 and just get some calls bought. We're at 498 tonight. We were back above 5 on Thursday. Again, we were 550 not that long ago, but things have changed since then. As long as there's calls sitting with it, I don't have a problem hedging. I do think your inputs are going to be down. Your nitrogen should be down from this last year. Dry fertilizer is down. So $5 corn likely works for a lot of you. And if that's a way to get started, it's probably the most economical way for me to get started, is to get something sold and either on a hedge or an HTA, and then look to get some calls bought. Feel free to give me a call or reach out if you've got any questions. I'd love to chat. Again, I am going to be